Hello everyone, this is Martin. Welcome back to another weekly video, and I welcome all new traders from around the world and new subscribers and my fellow students right here from this part of the world. And today's topic, I should say, is so important. I need you guys to pay attention. There aren't a lot of teachers, Forex teachers and educators out there that are going to tell you what I'm going to tell you today, so I need you to take notes. You're welcome to pause the video anytime you want and take down some of the notes to help you remember. And guys, I mean, the information is so important that if you do not pay attention, do not follow the advice, I believe this is going to severely impact your Forex success. So the big question I've got for you today is, take a look right over here. Is trading Forex fun or stressful? Now, it's a simple question and it should be really easy to answer, but you need to be honest with yourself. Being addictive to Forex trading is not the same as being fun. I want you to understand that. So if you're watching the computer all the time and you're watching the screen, making all kinds of trades every single day, or you're learning online, switching to different websites, trying to find the Holy Grail, is that really fun for you, or are you really stressed out? Anyways, that's the question. And let's be honest. Whenever you're trying to earn money in an unconventional way, let's be clear that trading is very unconventional. It's not something that everyone does, right? It can quickly turn out to be highly stressful when you are using your own money to make more money. However, the real test to your trading nerves comes when you start losing some of your real money, right? Ask yourself, how much of your starting capital can you afford to lose before your mind and common sense becomes unhinged? I mean, do you need to lose 10%? Can you afford to lose 20%? What if you've lost 30%? I mean, if you're not crazy by that time, by the time you've lost 30% or more, then you are crazy and you really don't know what you're doing. You should stop trading and continue to learn how to make better trades. I'll tell you something. If you're in this category right now and you've lost quite a bit of money, then trading definitely cannot be any fun. Okay, today's video topic. Now, take this advice from a pro. This is me right here, Martin. I'm from Toronto, Canada, very proud Canadian trader. And today's topic is stress-free Forex trading. I'm going to show you exactly what to do to attain an environment for trading that is stress-free. I've got simple tips for a happier trading life, and I'll tell you right now the key word is happier or happy. Simply put, this is the recipe or secret sauce for your trading happiness. And when you're happy, trust me guys, you will be more, or you will make more money effortlessly. Okay, let's see how this happens. Okay, first of all, what is stress-free trading? Now, I've got my definition. You may have yours, but mine is based on years of experience and also having worked with a lot of students. I do teach live in class, face-to-face. I can tell a lot about how students are doing, whether they're doing well or not. They often don't tell me exactly how well they're doing or how poorly they're doing or what kind of stress they're under. But you know what? I've got a pretty good read on people, especially when I teach live. So this is my definition for stress-free trading, and it is work less with minimal computer screen time, making simple decisions quickly without hesitation, feelings and emotions, growing your account balance in a safe and structured plan. Now, This is super important, guys. This is where you should pause the video. You should actually write this down. It could be your definition for stress-free trading. It is mine, and after a lot of study and research, I mean, I'm trying to make this as clear as I can. Take a look right here. Work less with minimal computer screen time. So we're not talking about spending lots of time on the computer. We're talking about making simple decisions quickly, not having to analyze for minutes or hours at a time, going through all the charts and trying to figure out what to do. We're making decisions without hesitation, feelings, and emotions. So, we're not going to make bad decisions, and growing your account balance in a safe and structured plan. I didn't say quickly, I said grow your account balance in a safe and structured plan. So that is all super important. Okay, here's the very first tip, guys. Okay, this is probably one of the most important ideas for you to trade stress-free, and it's an affirmation. Okay, here's the word affirmation. It means a promise to yourself. Promise yourself to forget about get rich quick money. Okay, so anything that you read on the internet, or if you're trying to learn how to trade Forex and get rich quickly, forget about it. It is a bad idea. Okay, now take a look at the guy on the roller coaster here on the right side. Okay, now take a look at this guy and think about your own experience, especially when you've gone on a roller coaster. You hop on board and start at the bottom of the ride. Then you go all the way up to the top before coming back down. Then you go up and down with some nauseating curves thrown in. Ask yourself, where do you end up in the end of the ride? Yep, you guessed it. You had a lot of short-term exhilaration. It was exciting for the short term, but at the same time, at the end of the ride, you ended up at the bottom all over again. The same place where you started. Do you understand what I'm saying? Somewhere, somehow, you are sold the dream about making fast, quick money. You're told or led to believe that trading Forex is the answer to your hopes and prayers for becoming rich. You're dead wrong. Feelings of greed is one of the worst traits that you can have as a trader, and is the quickest way to losing all your money. Greed feeds on your emotions and will only lead you to become a desperate trader. The idea for quick and easy cash is not my idea for stress-free trading. Okay, how many of you remember this famous tale, right? It's the tale of the tortoise and the hare. Here's the tortoise, like a turtle, and a hare, if you guys don't know, is basically a rabbit. Okay, so it's a classic tale of a race to the finish line between the speedy, fast hare against the very slow tortoise. It's a story that doesn't get old and is for all ages, young and old. In fact, I've told this story many times in my live class to my students, trying to make some very specific points. The lessons in the story are timeless and profound. Now, there's an important message that all traders, regardless of their experience, will find helpful in their trading success. So I urge all of you, Google the tortoise right here, the tortoise and the hare. Google that and read the story and see if you can understand the message in it. Okay, how do we do this? What's next? Well, number 2, my second piece of advice, don't take risks. Become a conservative trader. Become a conservative trader. Choose to be conservative, not aggressive. Conservative trader values taking less risk and waits for more positive confirmation before taking a trade. Reducing losses is a priority, more important than making money. Note that I said it's more important than making money. So it's important how to protect your money before you can even learn how to make money. This is probably the biggest reason why your trading sucks, guys, and why you will find yourself in a distinguished group of 90% of all losing traders. I'm not making this up. 90% of all the traders out there are losers, are losing traders, or you know, at some point in time lose most, if not all, their money. And I want you to be aware of that if you want to get out of this 90% group, you're going to have to make some changes in your trading lifestyle, and this is one of them. So become a conservative trader. Ignoring this advice is going to be very, very foolish for you. Now, number 3, choose your trading style wisely. Stop scalping the markets. Guys, I did this when I first started trading, okay? And, you know, I thought I could just open up the computer, switch to lower time frames, make a trade, and then make some really big money within 10, sometimes 5 minutes, 10 minutes, 20 minutes, get in and out real quick. That's called scalping the markets. That's when you're using the 1 minute and 5 minute time frames on your chart. So guys, stop this. It's gonna kill you, okay? You're chasing the dream. Your emotions and feelings are on hyperdrive when you trade the small time frames. I know this for a fact. When you scalp, you're really saying that you're smarter than the markets and you can predict what will happen next. Isn't that really what's happening when you trade the small time frames? You're really saying to yourself, or you're trying to convince yourself, that you're smarter than the markets, that you can predict what will happen next. Who's going to tell you that, guy? What other educator out there is going to tell you like it is? This is the problem. Now, you're forced to make too many quick decisions, often taking bad trades on feelings alone. So when your feelings take over, your good judgment will be compromised. This is self-destructive behavior and will only lead to big money losses. Simply, you're crazy and not being realistic. The discipline and steady nerves you require for this type of trading are out of this world. I'm telling you right now, because I blew up at least one of my accounts because of scalping. I mean, I made some really good money, but it was hard to keep up. I made about 100% in just a short few months, doing really well. And then all of a sudden I had a mental lapse and made some bad trades. And guess what? It was all gone in a flash. Okay, here's the next piece of good advice for you guys. If you want stress-free trading, number 4, choose to trade the trend. Learn how to follow the trend. Now, trend trading is easier to do than any other type because it's visually more apparent. In other words, once you open up your charts, it'll be very easy to spot the trends, and you may have your own ways of spotting trends, whether you're using moving averages, a trend line, or what have you, you know. But it's fairly easy to see on the chart. There are many ways to see a trend, and you simply have to follow where price is going. Now, this is important. Trends start when smart money comes into the market. Smart money are the banks. And it's better to follow smart money than trade against it. Smart money is transparent, and you can often find clues in the charts that shows you when smart money comes in and when smart money continues to drive price in a certain direction, whether it's an uptrend or a downtrend. Next, trend trading is not predictive, so you don't have to worry about the tops and bottoms as if you were looking for reversals, right? You're just simply following price as it goes higher in an uptrend or lower in a downtrend. With trends, you don't have to worry about missing an entry, right? Since trends can continue for a long time, there will be more opportunities to enter a trade later without being desperate. And that's the key to stress-free trading. You don't want to be desperate. So when you see a trend forming, there's always an opportunity a little bit later to get back into the trend. And I want you to think about, I'm not going to give you all the answers right now, but I want you to think about trend continuation signals. Take a look at your charts and see if you can see a signal when the trend continues. That's the time when you can jump in and hop on board the train and ride the trend a little further. Since trends continue for some time, right, your reward from your initial risk can be very, very high, much greater than other styles of trading. So I have a saying, okay, catch the trend and you're on a high. Okay, my number 5 great tip. Trade a mechanical system. Use a mechanical trading plan. So a trading plan is a set of rules that you can follow for every trade you take, and it gives you a step-by-step plan that you can always refer back to. So basically there's step 1, step 2, step 3, step 4, and so on. Okay, you can write this set of rules down on paper and have this beside your computer. It's on paper and not in your mind, and that's the key, guys. Okay, so you're not trading based on what you think is happening in your mind or what you see based on your feelings. It's actually a set of rules written down on paper. This way you're not trading by feelings. Whenever you see price move on a chart, you want to keep your emotions away from your trading as much as possible, right? And not make your trading decisions based on fear or greed. This set of rules defines your entire trade, from the setup to the entry, to trade money management, and to your exit strategy. Really, it's a plan, a defined plan from beginning to the end. You should always know almost immediately if a setup is valid. According to your rules, you want to become like a trading robot and instinctively repeat your actions and over again for every trade setup. You do this for consistency, and you want to be able to review this later on. This plan avoids indecision and second guessing, and that's important too, because a lot of traders, once you get scared or once you become stressed out, and even though you may see some really good setups, you become undecisive and you just can't pull the trigger, right? Does that remind you of yourself? Most importantly, this makes you a decisive trader, and that's what a step-by-step plan does. Okay, now I'm not going to give you every little piece of what do you call it? I'm not going to give you every perfect answer right now. I need you to figure out some things on your own. But basically, a mechanical plan is really important, and it gives you the following components. So if you have a really good mechanical step-by-step plan, you need an entry signal. You need a way to find the entry. And I use signals, an actual signal I can see on the chart. I'm not waiting for price to move to a certain level or anything like that. I wait for a signal. And I said signal that you can see. Next, your plan needs an entry confirmation. So even though you have an entry signal, you want to confirm it, because why? You're a conservative style trader and you're waiting for a little bit of confirmation. You're not going to just trade willy-nilly. No way. You're going to wait for confirmation. So there's something else in your chart that tells you that the entry is giving you good odds for success. Next, you need a worst case stop loss, not just an ordinary stop loss, but I call this a catastrophic stop loss, and it keeps a loss from getting out of control, right? How many of you have already lost money when you didn't have a stop, or you ignored your stop, you let the trade run into a bigger loss than you really wanted to? Next, you need a dynamic profit taking. Now, this is about taking profits at different levels without worrying about profit ratios. So I'm talking about these ratios which you all understand, like risk to reward 1 to 2, 1 to 3, 1 to 4. I don't like ratios, I'll be honest with you, but I have a system for taking profits dynamically as price is moving. Next, you need a trailing stop, a method for maximizing profits by allowing your trade to run. And finally, if it's a good step-by-step plan that you have, you need exit options. One, for exiting a trade before price hits your catastrophic loss. So I almost never let a trade hit my catastrophic loss. I normally would close the position before that, so that's great. And all of you should learn how to do that. And 2, exit a trade when the trend ends. So remember, we're trying to become a trend trader. We're following the trend for stress-free trading, and you have to know when a trend starts. You have to be able to see it. You don't get in necessarily when a trend starts, but you want to basically get out when the trend ends, okay, with some sort of confirmation. Okay, number 6 for trading stress-free. Trade on the daily charts. I'm dead serious about this, guys. Use your daily charts for your entries and exits. Here you can see I've got an example. This is the D1 time frame, okay? You can see right here. And these candles, each and every candle is 1 day's worth of price movement. Now, my best advice is trade end of day, and the daily charts give you the most accurate view of the markets without a lot of false signals. Daily charts allow you to see the bigger picture, which is important, whereas the lower time frames, so lower time frames being, 1 hour or less, can camouflage or even hide the roadblocks for price to go to. The best way to trade the daily charts is end of day. By that I mean when the candle fully closes. Most good brokers use the New York session close as the daily candle close. In other words, the New York session closes at 5 p.m. Eastern Standard Time. Wait for that candle to close, then look to get into a trade after that, if there is a trade. With end of day trading, you only look at your charts once per day. This is the benefit of end of day trading. This is the optimum for stress-free trading and frees up loads of your time. So once you're in a trade, don't go back and micromanage it, wishing you had made a better entry. You don't worry about perfect entries. And don't look for exits on the lower time frames as well, because most likely you will miss the bigger profits if you exit too early, okay? Let the trade run according to your plan. Now, of course, if you're trading end of day and you're just looking at your price charts once a day, most likely after work, well, what do you do with all the extra spare time you have? Okay, and that's a good question, guys, and let's take a look. Number 7, I want you to keep learning. Do simulated trading in your spare time. I said simulated. I didn't say demo trading. Simulated trading is something that's totally different. So with your spare time and thirst for knowledge, and I know you guys are hungry to learn, you guys are always searching the internet for the Holy Grail, but one thing you don't do, and this is probably more important than anything else, is to do simulated trading. It's more important than demo trading, and this is when you are, well, let me start by talking about demo trading first of all. Demo trading is when you open your charts. It is in real time, right? You have a demo account with the money that the broker has given you, often up to $50,000 in some brokers around the world, but you're taking trades in real time. So when you take a trade, you'll have to wait and see what happens 1 day later, or 2 days later, or 3 days. If the trade's going in your way, then obviously you may need to wait a few days to see what happens to your initial trade. However, sim trading or simulated trading, you can instantly see the results in a few minutes. So how do you sim trade? Okay, I'm not going to show you exactly right now by going to the chart, but what you need to do is on your MT4 trading software. Yeah, we use MT4, okay? So go find a broker. They're free. Every broker is going to give you a free MT4 charts. But what you need to do is go to the top of your charts to the toolbar, and number 1, disable the 2 chart shift buttons. 2, scroll back to a date where you want the simulated trading to start. 3, draw a vertical line with your vertical line tool. Then next, move your chart forward 1 bar at a time by simultaneously tapping the FN button at the bottom of your keyboard along with F12, the F12 key at the top of your keyboard. Do that at the same time, and this way you'll be moving your charts forward 1 by 1. Okay, I'll quickly show you guys. I've decided I'm going to show you. So here's the MT4 trading chart. This is what I've set up. This is not necessarily the exact charts that I trade with, but I'm just showing you right here a similar setup. So right up here, take a look at the top. This is your toolbar. These two buttons you want to click and disable. Okay, right now they're bright in color. Okay, so let me just a second here. So you click on that, and these two, they're called chart shift buttons. And then with your mouse, just grab your mouse and go back to a place where you want to start doing some simulated trading. Okay, so let's just say you want to start around here. Next, go to your vertical line tool. Take a look up here, guys. Click on that. Click on the click on the chart. You've drawn your vertical line. Okay, and the next thing you want to do is you want to be able to move your chart forward one by one. So at the same time, hold down the FN key with the F12 key. And so let's say you're starting to look for trade opportunities right here. Okay, you've got your vertical line, and let's see if this happens. So okay, take a look, guys. Okay, so you see a trade opportunity, perhaps. Okay, let me just go over. Well, let me do this really quickly so that you can get an idea. See, I'm going quickly, and you can see over here. Okay, let me just draw. There was a trade opportunity. Okay, there's a trade opportunity, so you could have taken a trade there. This is again a simulated trading. And then just fast forward. And by the way, simulated trading means taking the trade entry, putting in a stop loss. So let me just take that out for a second. Okay, so taking a trade here, stop loss here. I mean, according to your plan, okay? I'm just giving you a quick idea. I'm not telling you exactly how to trade, right? And then from this point forward, you want to advance the chart, each candlestick one by one to see what happens. So let's do that. Okay, just a second. Okay, so there's your entry. Let's take a look. You have your stop loss just maybe above a swing high or whatever. You're watching your trade, letting your trade run, At some point, you want to say to yourself, well, the trend is finished. See, we were in a downtrend, so you want to be able to exit, and perhaps right there with that white big candle, you see right over here, you may want to exit the trade. Go forward to see if you're, if that was correct again. And let's take a look. Yeah, see, so trade is starting to go against you. So you actually, if you entered around here, you made all these pips. And this is one way of doing simulated trading. And guys, this is so... Okay, I've shown you that really quickly. Guys, do your simulated trading whenever you've got spare time, and stop wasting your time searching the internet and trying to find the Holy Grail. It's just not there. And I'm telling you, I'm giving you the best piece of advice that no educator out there is going to give you. So stay with me. Number 8 here, limit your risk. For stress-free trading, you have to limit your account risk and stop losing money. It's vital that you don't trade a position size that causes you to be uncomfortable or anxious. Stay within your comfort zone with losses you can easily live with. The big problem is that traders don't know where to place your stops. They're stops, right? Stops define your risk in pips. There's a real easy way to define where your stops go, regardless of the currency pair, the time frame, and the spread. Your risk will always be the same. So when I'm talking about your risk, it's the amount of money that you're willing to lose on a trade, right? But regardless of the time frame, regardless of the currency pair, or the spread, the amount of money you're going to lose will always be the same because it's defined by the risk. Now, the risk is no more than 2% on any one trade. That's easy to follow, and you're going to be able to sleep at night. Knowing this, you now have the correct foundation to define your overall risk and choose the correct lot size to make sure your trading is stress-free. If you're not sure how this works exactly, I want you to do this, guys. Google and put in your address bar lot size calculator. The words lot size calculator. Okay? Number 9, keep it simple. I can't tell you how important this is. Trade only one currency pair at a time, okay? There's no need to open up second or third currency pair, and there's some really good reasons why. Trade one pair, the one that fits your mechanical trading plan the best. This keeps you disciplined and you avoid two big trading sins, right? In trading, there are a lot of sins, but two of the biggest are FOMO, F-O-M-O, which stands for fear of missing out, and the other one, revenge trading. How many of you take trades because you feared missing out on a trade once you see price move? And the other part is revenge trading. Obviously, you do revenge trading either out of greed because you're winning and you want to add to your trades by taking more trades, or you're losing, and when you see price turn around in your desired direction, then you want to take another trade, and you find that that also goes against you a little bit later on. So now you've got two losing positions. So guys, stop doing this. It just doesn't work, okay? Find the one pair that fits your trading plan the best. And one of the important things you can do is find a currency pair to trade that has strong versus weak currency. Another thing I want you to do is Google this, currency power indicator. Like I said, I'm not going to give you exact websites for these things, but it's so simple. Just Google, put these words in your address bar. Currency power indicator, showing you the websites for the strength of the individual currencies. Now you'll know which currencies are strong at the moment, which currencies are weak, and then you want to trade the strong versus the weak, or the weak versus the strong according to your trading plan. Okay, number 10. Okay, this may sound pretty simple, but guys, be happy. If you are trading with less stress, then sooner or later you're going to be happy. But I need you to be happy and understand why you're happy, and be happy with little goals, okay? So what do I mean by little goals? I want you to recognize the good little accomplishments while you're trading, whether you're learning or you're an experienced trader. But these are some of these small little goals that you can recognize and be happy with. Sticking with your trading plan, not taking any revenge trades, limiting the time you spend on your computer, sticking to your trading schedule, meeting your weekly and monthly goals, staying out of bad trades. And guys, this is really important. I do this all the time. I know it sounds corny, but when you're happy, smile. Smile. Because it's an inward smile, okay? And when you smile, you are happier and you understand that you are achieving the little goals, okay? Now, another thing about being happy with little goals is growing your account. Don't forget the power of compounding your earnings. Like, we all have to start somewhere, whether you start with $200 or $2,000 to fund your trading account. But believe me, growing your earnings by small amounts weekly and monthly, they will eventually turn into big results. This is compounding your earnings. I need you to do something else so that you can truly understand what I'm talking about, guys. It's find a compounding calculator online, plug in the numbers. The first number would be your starting account balance, which might be just $200, might be $2,000, might be $10,000. I don't know what it is. Plug that in and then watch your money grow over time, okay? And that you should be pretty happy with that, knowing that you can do this, okay? Now, the next thing, number 11 on my list here, stress-free trading, is rewards. Reward yourself when good things happen. Now, what do I mean by that? Well, you need to reaffirm your good deeds when you trade your plan and things work out. Of course, you can't win every trade, but when you attain your weekly or monthly goals, give yourself a pat on the back and reward yourself. Some ideas are, and now this sounds stupid, guys, but I have done all of this. I do this, and you need to do this for yourself. When things go your way, how about buying just a simple chocolate bar, some sweets? How about going out for an inexpensive dinner with your loved one or your partner? How about buying a piece of clothing or something that you really want? I mean, you don't have to spend a lot of money, but little rewards are healthy, and they're going to make you feel better, okay? The biggest reward, however, pay attention, the biggest reward you can give yourself is to withdraw some money from your trading account, even if it's a small amount of money. So if things are going well for you, withdraw $50, $100, $200. It doesn't matter, guys. Withdraw some money. You need to do this to remind yourself why you're trading in the first place. And this is the ultimate reward. Move on. Number 12. We're almost finished, so just bear with me, guys. Accept your losses. It's all part of the game. You've heard of the expression, you win some and you lose some, right? Well, don't dwell on a loss as long as you stick to your system. You need to develop more experience. That's the goal of trading. Develop more experience using your system so that you don't bail out just because you have a few losses. Instead, be ready to move on to the next trade, knowing that each new trade is a new beginning. Look, trading can be a tough business. I know that, and that's why I'm sharing this video with you. I need you to accept the fact that you can trade stress-free if you want to. You can do this. I've done it. I've changed, and I'm doing really well for myself, just letting you know. There will be good times and bad times. Don't despair. Every time your trading seems to spiral out of control, I want you to remember this video and go back and review it. Ask yourself, have you deviated from the good advice in this video? Are you trying to trade a different way? Are your emotions getting in your way for success? Do you even remember my definition for stress-free trading? If no, then go back to slide number 3, I believe it is. Here it is. What is stress-free trading? Go over this. Write this down. Guys, this is the secret sauce. This is the recipe. Work less with minimal computer screen time, making simple decisions quickly without hesitation, feelings and emotions, growing your account balance in a safe and structured plan. I urge all of you to write this down and put it on a big board above or beside your computer, okay? It is so important. I've got all kinds of stuff like this beside my computer. I've got an affirmations, I've got this, I've got also a commitment sheet I'll maybe share with you in another video, okay? So it's so important. Make the change, guys. It's up to you to decide if you're ready to break away from the 90% crowd of losing traders, okay? Stay with me. I want you to keep watching my videos, and I'll soon provide you with more information on how you can receive from me a free mini course on everything I've just talked about in this video. So I'm going to put together a whole bunch of information. I'll put it together in a mini course, and I'm going to give this to you free. So subscribe to the video, watch my next week's video, because I just produce videos once a week, and I'm going to let you know how to get this information, this free course very, very soon. Okay, so again, this is me right here, proud Canadian trader. Guys, I'm going to tell you like it is. If you want to really learn how to trade Forex, stay with me, subscribe. Don't forget to click on the like and the subscribe links below the YouTube video. You'll also need to click on the tiny bell to actually get my videos in your inbox. And please, I would appreciate this. Don't forget to comment below the video. I'll try to answer them. I'll try to answer all of them. So I really need your feedback. Okay, so take care, everyone. This is Martin. We'll see you again next week. And if you have any questions, you can always email me. And let me go back to the very first slide. Here's my email address, guys, right here, right down below. You can see mskyj007@gmail.com. My name is Martin, and love to hear from you. Take care. We'll talk to you again next week. Bye for now.